Sanford Schmidt has spent more than 3 decades helping families, business owners, and retirees make one of the most important financial transitions of their lives, turning wealth into lasting security for future generations. As founder and chairman of Schmidt Financial Group, he has built a practice centered on preserving assets, minimizing unnecessary tax exposure, and creating thoughtful strategies that support both retirement confidence and legacy protection. For many affluent families, financial planning is not simply about investment performance. It is about ensuring that years of hard work translate into stability for children, grandchildren, and future heirs. That process requires far more than basic portfolio management. It demands proactive estate planning, tax-aware retirement strategies, and a clear understanding of how wealth should be transferred with purpose and efficiency. Sanford Schmidt Financial Planning reflects that broader view. His work focuses on helping clients align financial decisions with long-term family goals while reducing the risks that often threaten wealth preservation. Many families mistakenly believe estate planning begins and ends with drafting a will or trust. While legal documents are essential, Sanford Schmidt emphasizes that true estate planning involves a much deeper financial strategy. Without proper coordination between retirement assets, insurance structures, tax planning, and beneficiary designations, even well-documented estates can create confusion, delays, and unnecessary tax burdens for heirs. Families often discover too late that outdated plans, poor asset titling, or incomplete beneficiary reviews have undermined their intentions. Schmidt Financial Group estate planning addresses these issues by looking beyond paperwork and focusing on the full financial picture. This includes collaboration with attorneys and accountants to ensure that estate structures work efficiently within the broader wealth transfer plan. Schmidt has long emphasized that successful planning happens when professional advisors work together. His experience working alongside top legal and tax professionals allows clients to approach complex wealth decisions with greater confidence and clarity. One of the most overlooked risks in wealth preservation involves large qualified retirement accounts. Many individuals assume these assets will pass smoothly to heirs, but significant tax exposure can dramatically reduce what beneficiaries ultimately receive. Traditional retirement plans such as IRAs and 401ks often carry deferred tax obligations that become highly visible during wealth transfer. Depending on estate size and income tax treatment, families may face substantial reductions in inherited value. As a Sanford Schmidt retirement advisor, Schmidt often educates clients about how retirement assets can become one of the least efficient vehicles for legacy transfer if left unmanaged. This is especially true for high net worth families whose retirement accounts represent a major portion of their estate. One strategy Schmidt Financial Group uses involves qualified leverage planning, which restructures highly taxed qualified retirement assets into more tax-efficient wealth transfer vehicles. When appropriate and properly structured, this can help replace potentially taxable retirement plan assets with income and estate tax-free benefits for heirs through life insurance solutions. This type of planning requires careful evaluation, but it highlights a larger principle: retirement planning should not be separated from estate planning. They are deeply connected, and overlooking that connection can be costly. Retirement planning is often framed around income replacement, but Sanford Schmidt views it as a long-term wealth preservation strategy. The goal is not only to fund retirement years comfortably, but also to prevent unnecessary erosion of assets through taxes, poor timing, or reactive decisions. Required minimum distributions, concentrated retirement holdings, and lack of distribution planning can create significant tax inefficiencies. Families who delay planning often find themselves forced into decisions with fewer options and higher costs. Proactive retirement planning allows for strategic withdrawals, better tax diversification, and stronger coordination with estate goals. It creates flexibility rather than urgency. Schmidt Financial Group supports clients by reviewing retirement structures regularly and adjusting plans as life circumstances change. Schmidt believes annual conversations are essential, not only to review financial performance but also to identify personal or family changes that may require updates to the strategy. That long-term consistency helps clients avoid one of the most common planning mistakes: assuming a strategy that worked 10 years ago still works today. Wealth transfer challenges are often caused by avoidable mistakes rather than market events. Sanford Schmidt regularly helps clients correct issues that have built up over years of neglect or incomplete planning. One common mistake is failing to update beneficiary designations after major life events such as marriages, divorces, business sales, or births in the family. Another is treating retirement accounts and insurance policies separately from the estate plan, creating unintended tax exposure or distribution problems. Business owners also frequently underestimate succession planning. Without a clear transition strategy, family businesses can face valuation disputes, liquidity problems, and family conflict at the worst possible time. Equally important is communication. Families may have sophisticated legal structures in place, but if heirs do not understand the intent behind those decisions, transitions can still become difficult. Schmidt encourages education and transparency as part of the planning process. He believes that honest conversations and clear expectations are often just as valuable as technical financial solutions. Good communication, honesty, and transparency remain central to his work with multi-generational families. Financial plans are strongest when they reflect more than numbers. Estate and retirement planning should support the values a family wants to preserve, whether that means charitable giving, supporting future education, protecting a family business, or creating financial independence for the next generation. Sanford Schmidt financial planning places significant emphasis on understanding those priorities before recommending strategies. Planning decisions are guided by client goals, objectives, and risk tolerance rather than generic financial templates. That personalized approach helps families make decisions with greater confidence because the strategy reflects what matters most to them, not simply what appears efficient on paper. For some families, preserving privacy and simplicity is the priority. For others, the focus is maximizing tax efficiency or building philanthropic structures. In every case, long-term success depends on matching financial tools to personal values. This is one reason Schmidt Financial Group has maintained strong client relationships over time. Clients are not looking for one-time transactions. They are looking for a trusted advisor who understands both the technical and personal sides of wealth planning. Legacy protection requires structure, but it also requires trust. High net worth families often face complex decisions involving multiple advisors, significant assets, and long-term family consequences. In those moments, education and transparency become critical. Sanford Schmidt has built his reputation by helping clients understand not just what decisions to make, but why those decisions matter. His role often centers on simplifying complexity and ensuring that planning strategies remain aligned with both legal standards and client intentions. His background in accounting, combined with credentials including CFP, CHFC, and CLU, supports a disciplined approach to comprehensive planning. As founder and chairman of Schmidt Financial Group, he works closely with affluent families to design strategies that protect wealth and reduce uncertainty across generations. That guidance extends beyond technical recommendations. It includes ongoing education, collaboration with professional advisors, and a commitment to helping families stay prepared as financial conditions evolve. Generational wealth is rarely preserved by accident. It is the result of consistent decisions, proactive planning, and a willingness to address complex issues before they become urgent. Sanford Schmidt understands that retirement planning and estate planning are not separate conversations. They are part of the same responsibility, protecting what families have built and ensuring it serves the people and values that matter most. Through Schmidt Financial Group estate planning and long-term retirement strategy, clients gain more than financial organization. They gain clarity about how wealth should work for their family, today and in the future. That focus on education, strategy, and personalized relationships continues to define Sanford Schmidt as a trusted advisor for individuals, retirees, and business owners seeking lasting financial confidence and a smoother path for wealth transfer across generations.